Welcome to this new automotive news video for Friday, March 27, 2026. And today we're going to cover a lot of news related to China. We need to adapt as they're dominating the market, including Europe. Meanwhile, Volkswagen, a major European automotive group, said it will drop one of its brands in China. On the other hand, at the same time, we have two new Chinese brands that have just announced their arrival on the European market. We also talked about MG, which is a Chinese brand that has already been in Europe for a few years, and is now revealing the prices of its brand new MG4. This is the very first electric car sold in Europe to feature a semi-solid battery. And you'll see that it's going to hurt the competition a lot because the prices announced by MG are particularly low. And finally, we'll talk about Cupra, another brand from the Volkswagen Group, which is announcing the arrival of new entry-level versions of its models, cheaper versions designed to better compete with SUVs from Chinese brands. Before we start the topics in this video, I'm adding a quick news item. In France, fuel prices are skyrocketing, with diesel reaching almost €3 per liter at some stations. And we have a fabulous government that one day is able to look us straight in the eye and tell us there's absolutely no risk of a shortage, that there's no point in rushing to stock up on diesel or gasoline at the local station. And then the next day, it's also able to announce that to avoid shortages, it would temporarily authorize sales at the stations. Degraded quality diesel fuel, something that's not very well known. There are two types of diesel sold in France. Let's say summer diesel and winter diesel. Both of them don't quite meet the same quality standards, and the specialty diesel isn't designed to withstand temperatures below 0 degrees Celsius. Usually the transition between winter diesel and summer diesel happens around May. Summer diesel is faster and easier to produce than winter diesel. The government has decided to make this switch earlier to try to increase diesel production and thus reduce prices at the pump. So rest assured, with this lower quality diesel, nothing bad is likely to happen to your engine. However, if suddenly the temperatures drop below 0 again, summer diesel can freeze, and it can be much more difficult and take much longer to start your car, so there you go, just a little clarification about diesel. We'll move on to the news and video summary. I hope you'll find it interesting. If that's the case, please like, subscribe for future videos, click the boost button, and leave a comment sharing your thoughts on today's news. We're going to start this video by talking about Volkswagen On, which is actually removing one of its brands from China, and that's the Skoda brand. Skoda will withdraw from the Chinese market before the end of 2026. This is a significant decision made by Volkswagen, because until now, the Chinese market was one of the biggest markets for Skoda, but also for Volkswagen. Except that in recent years, Chinese competition has become so strong, especially in electric cars, that some European brands simply can't compete anymore. Because the Chinese do better for less money as a result, Skoda, which still offers a fairly complex and complete range in China with the Octavia, the Superb, the Kamiq, the Karoq, the Kodiaq, despite this fairly wide range and despite good sales figures. Up until 2018, when Skoda had sold more than 340,000 vehicles and said it was ready to invest €2 billion to reach 600,000 vehicles per year, the brand, which had been present in China since 1936 for 90 years, finally saw its sales plummet at an astonishing speed. Sales went from 340,000 units in 2018 to 15,000 in 2025. That's sales divided by 20 in 7 years. And the Volkswagen Group has reached the point where keeping Skoda in China costs it more than completely pulling the brand from the market. So Skoda in China, it's over in the coming months. A situation we might see again in the coming months, since it's far from the only brand that has seen its sales drop dramatically in China in recent years. Audi, Mercedes, and Porsche have taken a beating in this market. It feels like the beginning of the end for them. Anyway, on one hand, we have a big European brand leaving China, and on the other, Chinese brands coming to Europe. Just today, two more Chinese brands announced their arrival in Europe. The first one is GAC, a Chinese brand that will produce in Europe, in Italy. More specifically, the Ion UT, an electric model with a range of 430 kilometers and fast charging that allows you to go from 30% to 80% in 24 minutes. This will be the first GAC car to be marketed in Europe, with a commercial rollout planned across the entire European Union starting from mid-April. See Geely, you might already know, because Geely owns some brands like Volvo, Lotus, and even Smart. But Geely is like Volkswagen. It's a car brand that owns other brands, and the Geely brand is now coming to the European market. This was announced this morning, more specifically for the French market. They will be selling the Starry EMI there. It's a plug-in hybrid SUV that's 4.82 meters long. On paper, it promises 100 kilometers range in fully electric mode. In its largest version, with entry-level models expected to be offered at around €30,000, I'll let you see what the competition offers for 30,000 euros. There's absolutely nothing comparable. Unfortunately, it will be pure tech or very small electric cars with very limited range. They will also be selling the E5 in France, which is a 100% electric SUV that might be a little less popular in France than the Starry, since this one is made in China. It likely won't qualify for the electric car bonus, the CEE, so it'll be slightly pricier than rivals. Also, the E5 is available in two versions, either a 49 or 60 kilowatt battery with ranges varying from 400 to 500 kilowatt fast charging that goes up to 160 kilowatts and charging from 10 to 80% battery in 30 minutes. Entry-level prices start at about 37,000 euros, making it less appealing than European competitors. Speaking of European competition, Cupra, a brand belonging to Volkswagen, has decided to add a new entry-level version to its Tavascan lineup. It is based on the MEB platform, the same platform as other Volkswagen models such as the Skoda Elroq, the Enyaq, or the Volkswagen E3 ID4 and ID5. The Tavascan will receive the same treatment as the models I just mentioned, since it will also be available in a new version. Equipped with a 58 kW LFP battery, while the model until now was only offered with a 77 kW NMC battery. These batteries will be paired with an electric motor that produces 190 horsepower. And in this configuration, the Cupra Tavascan offers a range of 435 km WLTP with fast charging from 10 to 80%, which can be done in 26 minutes. Just like the other previously mentioned models, the Tavascan also has its interior modernized. The infotainment will now be managed by Android Automotive, instead of the software that was developed by Cupra, which belongs to Volkswagen. So here it's goodbye to the in-house system to make way for an Android system. It will also benefit from a new 10.25-inch digital instrument cluster, as well as, and this is where the real good news is, a steering wheel equipped with physical buttons that will replace some controls that were previously only accessible through the touchscreen. This new version will also be compatible with V2L and V2G, which are technologies that allow external electrical devices like a coffee maker or a computer to use the car's battery, or even to send electricity from the vehicle back to the power grid. As for the price, Cupra hasn't announced the new price for this entry-level version yet. What we do know is that the price will definitely be lower than the 46,500 euros needed to buy the current entry-level model. And what we also know is that since it's still produced in China, normally it still won't be eligible for the French ecological bonus. The famous one. This. In any case, for now, since it's said that Volkswagen is considering moving the production of the Tavascan to Europe, we still don't know the detailed price of this new version. What we do know, however, is that it should be around 40,000 to 42,000 euros. And for that price, at Tesla, you can still get the Model Y in the propulsion trim, which is already eligible for the CAE and offers 534 kilometers of range, 100 more than the Tavascan. By the way, a small detail compared to the Tavascan, whereas the other large models from Volkswagen, like the Enyaq, the Elroq, or the Volkswagen ID4, those models have moved up to the high-end versions, with batteries of either 60 or 79 kWh NMC. That won't be the case with the Cupra Tavascan, which will keep slightly smaller batteries, 77 kWh. And speaking of batteries, that's it. MG is officially launching in Europe and in France the very first mass-produced electric car equipped with semi-solid batteries, whose main advantage is being more compact. As a result, with batteries the same size as conventional ones, you get much more range. These batteries also charge faster and are even better overall. They're also safer since there's much less risk of overheating, thermal runaway, or fire. So let's say this is the new generation of batteries arriving for the first time in Europe on the MG4. So you'll see, the price announced by MG for this MG4 is quite low, much lower than the price of the European competition. But MG may not have made the best technical choices when it comes to the rest of the MG4, which means it might be a little less interesting than expected. Notably because MG decided to install two different batteries in this car, either 43 kWh or 50 kWh. The batteries have a relatively small energy capacity, which results in a rather low range as well. 325 km for the small battery, 416 WLTP for the large battery, and a charging power limited to 87 kWh. So it's a bit of a mixed bag, because in terms of range, it's about the same as what the European competitors offer. If you take a 308 or a Renault 5 E-Tech, it's in that ballpark for the same category of car. For fast charging, it's slightly better than the Renault 5, but not as good as the 308. So it doesn't stand out for technology, but possibly for price, because even if it doesn't offer more than the competition, it offers the same for much less money. If you take an electric R5 with a 52 kW battery, it's still 33,000 bucks. A 308 or even a 208 if you go for a slightly smaller model, it's between 34,000 and 43,000 euros for the entry-level version, while MG, for its MG4, is announcing 19,000 euros And that's without any incentives. That's about the same price as an electric C3, which will offer a bit less range and similar charging speed. However, this one is eligible for the incentive. The definite advantage of the MG4 over the C3 is that with an MG4, you don't have to deal with the questionable design choices made for the C3. So, let me know what you think in the comments. Do you think the MG4 will sell well or not? Considering that MG chose to focus on price rather than high range, which they might have done to diversify? It's true that at 30,000 euros with 600 km WLTP, it could have revolutionized electric cars. We'll see. For now, we've discussed everything for today's video, and I hope you found it interesting. If that's the case, as usual, don't hesitate to show it by leaving a like, subscribing, and maybe even supporting the channel by clicking the join button below. See you in the next video tomorrow. Bye.